The show now is Jonathan Barratt. He's CIO at Probis Securities. Jonathan, hi, good to have you. And, there are a couple of things happening in the international markets. One is China officials suggesting a policy rollout to support the local consumption. And the markets clearly are waiting for that most important Politburo meeting that happens by the end of this month. And that could really turn tables if consumption is actually pushed onto. And that's exactly what the crude oil prices really seem to be watching out at this point in time.
Yes, that's 100% correct. I think when we look at it, I think the most important thing is where we see China at the moment and China rolling out stimulus policies to try and get her alien economy go. If that's the case, we are seeing surprise increase in demand from China, and as a result of that, that should help to stabilise the prices around these levels. There are some economic headwinds. Obviously, the economies are starting to slow down. That is a bit of a concern because demand isn't filtering through for that. And, of course, we know because the IEA actually cut forecasts for demand. So, yes, I think China's a big play at the moment.
Jonathan, also, how are you looking at the output cuts? Because when you look at the shale output from US, that seems to be declining. Russian output for the third quarter also has been ranked on the lower side. Now, we talked about the demand side of it. How are you looking at the supply part?
Well, I think the supply side's certainly there, and I also think of supply issues and bottlenecks, particularly out of Libya and co. And if they continue or escalate, that could see supply cuts there. I do also think that although the US is cutting back on some of its supply, there is an engineering in terms of sort of trying to say, well, okay, we'll ease back supply because we don't think the economics are actually there to support it, and we don't want to see the price lower. Remember, the US are now the largest producer, and as a result of that, they definitely don't want to see prices too low as well. So quite important, but on the supply side, I think developments in Libya could be a major concern on that side, but I think the price of oil will remain relatively stable.
We did see prices try to inch at 80, even 82 in the previous week, but that hasn't really been able to hold. So what's your sense on the price range for this quarter, let's say?
Well, I think that's the interesting thing because I think the powers have made or the supply and demand scenarios have kept oil in a relatively reasonable range. Yes, we've tested the top side. We've also tested the low side. And I actually think that's continue. If I looked at the range, the top end of the range for Brent would have to be about 82.50. And then we come down to 78 and maybe a little bit lower. But when we haven't seen major trending markets in the oil market for quite some time. And I think whilst we're going through these machinations, it's nice to actually see the price in a reasonably stable, tight range. 82 on the top side, 78 on the downside, and a breakthrough that round about 75.
Okay. How would you also look at the natural gas prices? I mean, we saw a 5% jump overnight into that. The air conditioning demand, especially from Europe, seems to be quite supportive. And with the kind of heat wave that we have seen for a second straight month in the month of July, would you see demand here as well be supportive?
I would have liked to have seen a lot more demand to pick up, but then we look at the volatility in the price, which is not like oil. The volatility in the natural gas price sort of always remains to be on the downside at the moment. We see the spikes, but they get sold into. At around 2.5 BTU, 2.6 BTU, I still think it's at the lower end of its range and would suggest that given the climate issues that we're having, that it should be a lot higher from where it is at the moment.
Also, how are you reading into the summer driving season demand? I mean, that is something that the world watches out for in US and the Western world.
Yep. Look, I think so. I don't think the market's really factored that in. I think that it'll be very interesting this year with the drive time to see how many people will actually hit the roads in the States. And that is a big important because if we've got that the headwinds of economic slowdown amongst us, will people be going to the roads or will they be staying at home? I don't think the market's really factored in the fact that we will get peak demand through that area because I think the economics of the day will suggest that things aren't as positive as what we think.
So, Jonathan, while you have given us a near-term range for the crude oil prices, I mean, when you look at the various forecasts by the end of this year, there are still numbers floating at around 75 on the lower side, 95 on the higher side. How would you see the year closing?
Look, I think 95 is too expensive, and I think the downside's too cheap. I think for the last 6 months, the market has done well to keep it quite stable. I think I'd be looking still at the ranges and I think we're at the lower end of that range at the moment. And I do think that 95 is too expensive, but I think around 85 is more realistic if we want to have a topside target.
For the second half of this year, I mean, just taking a context from the first half of this year, we've seen gold do quite well. Lithium was another one which was trading in the positive for the first year. Silver seems to be outperforming. If you look at the last 1 month added to the first half of this charts, what is it that that catches your eye in overall commodities for the second half now?
Look, I think we've really got to play about how the economy performs. The general global macros, see what China's doing. Silver has always underperformed gold, and we always like silver because it does have those volatile rises to the top side and then comes off. Gold is sort of not a very happy camper on that because we have those inflationary controls under control, and as a result of that, I think people will divest out of that into some of the other commodities. I'd be more concerned about some of the grains markets because they're the ones that are going to have more of a hit if the climate change theory continues to go through the economies. So looking at the grains, those sorts of commodities, I think will have a bit of a pickup over the next 6 months.
I have a final question on this one, specifically on China. And they have been promising a big bang stimulus measure for a very long time now. And the markets do believe that the Politburo meeting by the end of this month could actually come out with something more strong, significant. What are your expectations? And if that does happen, what commodity do you see a direct impact on?
Well, I think China, the PBOC has tried to put a lot of policy together. And the fact that the policy has not been working, they've got zero inflation and a chance of deflation. So as an economy, it's not performing. If they come out with some form of monetary or fiscal stimulus, then it should be across the board. One at commodity, which we continue to support, that might have a large move, is copper. We have supply constraints on that, which are quite serious. And if we do see increased demand from those big stimulus policy out of China, that'll be one commodity that'll have a real good test to the top side.
Okay, all right, Jonathan, as well as Manisha, thanks very much for bringing us that perspective on the entire commodity space. Well, for the markets, it's definitely